Today is May 10th. Just make sure that I'm recording. And the volume's up as well. Okay, yeah. So today's May 10th. It's a Monday. And I took 2 trades today. Both of them were on Tesla. Both bad trades. One was losing, the other one was winning. Pretty much canceled each other out. I ended the day really, really slightly green. So yeah, let's just start off. I think the daily chart is fine for this. So Tesla clear downtrend over the last month or so actually. We're forming higher lows and we're forming lower lows. I can even draw this little, maybe like flag or whatever you call it, wedge maybe. But this is just to indicate that the trend is down on Tesla. No reason to play demand in a downtrend, unless we have clear signs of relative strength on a day. Really just focused on the short side, just going with the trend on Tesla. So that's just a higher time frame analysis. So let's go down to an intraday chart. Okay, one thing I want to do really quickly is I'm gonna mark this. No, it wasn't on ES, it was on NQ. Okay, so I removed this from my chart, but I'm just gonna add it back. So this, I removed this zone right here. And just mark that up. Because I wasn't really too sure about this zone, but I'm gonna be talking about why I just marked this up and just some analysis of what really happened and where I went wrong today. So you can clearly see that right off of the open, Tesla is weak. I mean, yes, NQ did have this massive 50-point red candle, but I mean, ES is pretty choppy, NQ is moving down, so is Tesla. A lot of the other equities were holding value somewhat well, but Tesla wasn't really giving back. Tesla had a massive drop. So automatically, I think to myself that, okay, Tesla's weak. I'm looking for some sort of short opportunity, considering the fact that we really don't have demand all the way until 90-minute, 1 hour daily. This stacked demand area around 625, and at the time Tesla opened up at 665. So definitely room to run low. So the first play that I was considering was a break of a key level, and 650 is a key psychological level. So I'm thinking that, okay, maybe there's some short opportunity here, considering the fact that we had a short period of consolidation, more of a quicker play, but I didn't take the 650 break, mainly because, yes, I know ES didn't have demand all the way lower, 4193, so it actually just broke this demand zone, but ES didn't have demand, but look where NQ had demand. I was pretty cautious about this zone, just because of its weird formation, but still have to respect the fact that we're in a demand zone. This is the first test of a demand zone, so I don't want to enter puts right here. So that's why I avoided this 950 break. Where I did enter was this 5-minute drop, base drop. So I entered at 10 o'clock. So let me just highlight that. So what I did is I entered slightly before the break. Always try to anticipate low day right before it happens, just in case it doesn't work out. So I didn't really enter here. I entered somewhere around, I think, 648, somewhere around 648. So I did anticipate it, and I did unfortunately wait. I waited for this candle to close, and then pretty much stopped out as this candle started moving higher. Because my stop was, or my plan was to take this 5-minute drop base drop into demand, and my stop was simply when my plan failed, and when we had this very bullish candle on decent volume, on really good volume, I knew my plan was failed, so I was just trying to get some money back from this candle. But I think I ended up losing like 50 cents per contract, but I only played one contract, so I ended up losing $50 on this, which isn't a big deal at all. Made it back on another trade. But just looking objectively now, what were my confirmations going into this? Tesla higher time frame analysis, it is weak, so that is one confirmation. Same with intraday, it's pretty weak. Second confirmation is, very, 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 very consistent volume. Uh, Usually, as I talk about, 930 tends to be the highest volume candle, and then we just slowly decrease. But I mean, this we're holding volume very well. We're having these spikes in volume, so sellers are clearly interested. So that was my second confirmation. My third confirmation was, no demand being lower, and this very, very powerful daily demand acting as a magnet. Even though it is quite far away, Tesla has the ability to move significantly in a short period of time. So that was my third confirmation. A a sorry, my third confirmation was this daily demand acting as a magnet. And then finally, my fourth confirmation was this base drop right here. Um, Below me, I mean, we broke through 650. We started holding it as resistance, set up a base drop. So this is where I entered. So looking objectively, not a bad trade at all. We had four confirmations. Tesla was weak on a higher time frame. But now just looking where I went wrong. I always talk about having at least three confirmations, preferably four. So check mark. Good. I waited for four confirmations. But I also have to make sure there aren't any immediate caution factors. And what I mean by this is, yes, the trade can have several confirmations, but if there's a big red flag, or if there's some caution factor which you're scared about going to the trade, then it's just best to avoid, because there will be trades where there's good confirmations and no real caution factors, or nothing to be scared of. So then you should execute. But in this case, I just want to highlight quickly that prior to my entry, oh my bad, right here. Okay, so prior to my entry, Tesla really moved from 665 all the way down to 645, in a span of 25 minutes. And yes, we did consolidate for a slight period of time, but for the majority of the time, Tesla moved pretty aggressively. A $20 move in such a short period of time. So I have to ask myself, this was a pretty aggressive drop in a short period of time with no real period of consolidation. So what are my chances that Tesla is going to have the same exact drop? This type of movement is what I'm betting on, and that's why I'm entering puts. But we just had this 20-point drop with no real period of consolidation. So what are the chances that Tesla's going to replicate this drop? So that was my first area of caution. My second area of caution is, yes, we were in demand, but we did have this nice red candle breaking low day, and this was a cautious and unsure zone for me. So to be honest, I really, really wasn't too worried about demand. But I still had to respect the fact that we did have demand. So not a huge red flag for me, for the first trade at least. This demand, but the fact that we were pretty extended, 20-point move, we at least need like 15 to 30 minutes of consolidation to let us know that sellers are still interested in bringing us lower. So yes, four confirmations, but I was a little bit skeptical just because of these two caution factors. And when we have caution factors like this, it's really just best to avoid, because the trade can go either way. The trade can work out, and it can be. I'm sorry about that. The market just ended. But as I was saying, the trade can work out fabulously. It can be a nice winner, or it can be a loser. And at this point, I'm kind of playing the guessing game, because I'm betting that Tesla's going to replicate a move like this. So it's really just best to wait out. If there is another clean opportunity with more periods of consolidation, then I probably will take it. So that was the first trade. It was better than the second one, but I still think it's avoidable. I'm gonna go over these two trades with Dylan as well, so I can talk about them in later videos. But my second trade was actually another low day break. This one ended up working out, not as well, but still worked out. So I entered, as always, slightly before the break. And went in my favor as soon as we started coming back up. and we didn't have the break I wanted us to, I pretty much exited at the low of this candle. Yeah, so entered right before the break, not a clean break, so I pretty much exited. So it really was the same thesis, break of low day, nice bear flag, volume still holding up relatively well. So that's three confirmations, and then this demand obviously acting as a magnet, and that higher time frame analysis of us being weak on Tesla. So really the same confirmations going into this trade. Instead of a DBD, it was really just a bear flag. But this is where I have to, ask myself. Um, so Tesla had, or not Tesla, NQ had clear 1 hour demand right here. This 1 2 hour demand was really the same zone. So just thinking objectively, why would I take calls? Oh, my bad. Why would I take puts knowing that we have knowing that we're entering fresh demand below? And I was convincing myself that we broke through two demand zones. We're weak on NQ, we're weak on Tesla. This has to drop, but this is really a bias. We're clearly entering 1 hour demand. It's a fresh demand zone. I marked it for a reason. Demand zones have a good chance of bouncing, and what do? We bounced. So all of these low day breaks at 10:45, at 11, at 11:15, at 11:35, these were all fake outs, and these could have all easily been avoided just by knowing that we have 1 hour demand, 2 hour demand right here. So just the risk to reward is skewed. Yes, NQ may drop for a candle. You may get a couple of points, maybe 2 or 3 points, but eventually my final target is this 90-minute demand here, and that's really not going to happen unless NQ can break this demand zone. So this was just a horrible trade on my end. Knowing that we had fresh demand below, I I still ended up executing puts, this Tesla low daybreak. It's fine that it wasn't really a key level. 6:45 acted as support once, two times, and three times. So this was intraday support. But just knowing, like, this is a huge red flag for me. Uh, I'm taking puts knowing we have fresh demand, lower probability trade, best to avoid Tesla. Tesla did eventually end up rolling lower, but again, no reason to take puts while there's fresh demand. By the time by the time NQ did end up rolling over, Tesla was already down 5%. So not only are we overextended to the downside, um on a int or not only are we overextended on this nice impulse move down, but just knowing objectively that we are down 5%, and that is huge for Tesla. So why would I really bet that Tesla is going to go any lower, even if the setup does look nice? So those are just lessons about being overextended on a short period of time, and just being overextended in general. Like I'm not gonna take puts here, knowing that we moved down five or even 6% on Tesla, and I don't want to take puts knowing we moved that aggressively down in such a short period of time. So those are just some uh overextended lessons. Really weren't any good setups today. I forced a lot. Glad that I somehow ended green, but I really shouldn't have taken any trades today. And so I'm just gonna end the video here. Hopefully tomorrow will be better for me.